Hello, everyone. Thank you for joining the quest. I'm PS Quest, and this is Crypto Quest. So the goal for your crypto journey, of course, is to build a strong portfolio that continues growing in value. And if that means getting into coins low and getting out of them high, switching into new coins to follow the action, then that's what we have to do. So last episode, I talked about how to be consistent with the right calls in crypto, how to stay ahead of the curve, how not to get into a coin that's going to be stagnant or devalue right after you buy it. So you buy the dip, you sell the all-time high. But what does it mean when you say buy the dip, right? Because it can dip and then it just keeps on dipping and dipping and dipping, and you can't buy all of them, right? I mean, at a certain point, you're just like, well, I bought the dip. Now what next, right? So what is a dip? Well, that depends on the market. But dips can be as little as a 5% drop in price to as much as an 80% drop in price. And when we're talking about Bitcoin or some of the larger cap coins, typically a good rule of thumb would be dipping down below the 200-day moving average. That's usually a pretty smart move to pick up. These smaller cap coins, maybe you want to see a 50% dip or even higher. It's not unquestionable to put a really crazy order in. Like when Solana was at $230, I had a buy order in at $115. That's what I consider to be buy the dip, and that's a larger cap coin too. So, of course, it never picked it up, and I later ended up picking it up at 161. Kept dipping down, and this happens. It'll happen in a market like this, but we can expect recoveries. And I was on vacation last week, but I did manage to get online to be able to do Twitter. And I tweeted out a few of the altcoins that I was looking at that had a fantastic recovery. And let's actually take a look at those. One of them was Flux. And I believe it was on the news that it was a Binance listing, and Flux just went crazy. This is all during, the insane dip, which we're going to talk about the details of that. But yeah, we're talking about 140% up. So you get in on the dip anywhere like around, let's say here. You sell up here and you're happy, right? And then you're in the profits, and then you wait and maybe you pick it back up again over here. And then you can expect to move back up here. That's buy the dip, sell the high, right? So it's when it's close to all-time high or it's at all-time high, you sell it, and then you just wait and you be patient for it to come back down. So another one that recovered almost instantly was, Render had a nice recovery. Render was up about 40% yesterday. Also, Opus was one of those that had a very nice recovery as well. And you can see, these huge green candles. That is a nice recovery on something that's down quite a bit. I mean, we're talking, it's down, let's say the price was about 580. That's down 40%. But guess what? It went up from the bottom. It went up almost 40% as well. So it's almost instant recovered. And I mentioned a few of these calls on my Twitter. Rose also instant recovered. It comes down here. Check it out. So the price is here, right? It dips down here. Oh my goodness! But then it just instant recovers right back. Over the weekend. The reason why is because this weekend saw a lot of interest, I think, in accumulating more of these lower cap altcoins. And that's one of the reasons why I remain pretty optimistic about the price of the crypto markets in general, because we're not seeing just massive dumping of coins and leaving it alone. We're seeing people still buy. We're seeing big money flow into a lot of these coins. So what's going on, guys? I mean, what is this whole thing? I have a draw pad here. I'm going to draw this out. Here's what's happening. FUD. FUD. What part of FUD are we in? We're right here. This is where we are. Uncertainty, not so much. Doubt, not so much. I think people are confident in what crypto is and what it does and what it can do. But there is fear in the market right now. Why is there fear in the market right now? Well, mostly because people are scared because of inflation. And whenever we see assets start to diminish when we see currency start to diminish in value and we see assets start to appreciate heavily in value, to the point where it becomes more difficult to buy. Purchasing power is not easy. When we see that, people get scared, and they get the heck out of volatile assets like cryptocurrency, which is still considered to be a volatile asset. I mean, anything that can move up and down in price 10, 20, 30, 40%, and that's commonplace. They can do that quite regularly. That's a volatile asset. So let's read this article here by CNBC. It says, Treasury yields are steady after hot inflation number following big increase this week. Terrible headline, as to be expected. It doesn't mean anything. But the real deal, the information that I want to show you is the November Consumer Price Index surged 6.8% year over year, the fastest rate since 1982. That's 40 years ago, guys. The Labor Department reported Friday. Economists surveyed by Dow Jones expected the index to climb 6.7 from the year prior, while some investors feared an even higher figure. Now, it's true that the yield on the 10-year note inched higher immediately following the CPI release. It doesn't really mean anything. I mean, the key is here the Consumer Price Index. That means inflation. That means how much stuff costs. Surged 6.8%. And guys, this is conservative, okay? This is a very, very conservative number. In fact, it might not even be a true number. It might just be a cherry-picked, aggregate of things that didn't go up that much. Because here's what I'm saying. I go to the grocery store, and I see everything is up. Things that used to be $1.99 are now $2.99. Things that used to be $2.99 are now $3.50 or $4.50. I've seen, the gas prices where I live are $5.20. Whereas they were, a year ago, they were $2, $2.50. That's double. Okay, that's 100% inflation. There's another. Actually, check this out. Dollar Tree. Now they're going to start charging $1.25. So Dollar Tree is one of those discount stores, right? Where everything's $1. Everything's fixed at $1. And now guess what? They're going to hike the price to $1.25. Does that sound like 6.8% inflation? No, that's 25% inflation. Okay, so this is it. It's fear. People are scared because they don't believe what the media is telling them. They don't believe that inflation is only that the consumer price index only increased 6.8%. They see the prices and they say, whoa, man, stuff is getting more expensive. This is kind of scary. I think I'm going to pull my money out of these volatile places. Okay, so if you see something volatile, you get out. That is what is happening. Okay, so anybody who's questioning what the heck's going on right now, dude, people are pulling their money out because of fear. How long does that last is the next question. That's the most important question to ask is, how long is this going to last? How long are people going to be scared? Well, guess what? They're going to be scared until the big money investors start putting their money back into cryptocurrency, pumping the price up like crazy, and then people say, hey, look, I can get a hedge against inflation by buying cryptocurrency. I can buy Bitcoin and it's not inflationary. As soon as that connection is made, you better believe that retail is going to come right back in. So how long will that take? Who knows? Maybe after the holidays. Right now, people are spending money more than they've ever spent money before because, in a year, actually it is more than they've ever spent money before because everything's more expensive. So by default, everyone's spending more money than they ever have before. But this time of year is the biggest time that people start spending the most money. And so they're going to start seeing, hey, man, last year I got this gift and it was only $40 and now it's like $60 and, and it cost me more to get over there because gas prices and shipping prices are high and it's delayed and it's, oh my goodness. It used to be, it was a $20 order on Amazon for free shipping and now it's like, I don't know, 40 or 60 or something crazy. Anyway, it's just clear, it's becoming clear to the average consumer that stuff is expensive. But after the holidays are over and there's a little bit of a lull and people are saying, hey, you know what, I got a Christmas bonus. It looks like it's not that big of a deal after all. Maybe gas prices come down a little bit, but probably not. I don't think gas prices are going to come down. But, we see the stock market looking good. And there's these other indicators. And then, of course, investors are happy with the price of things the way they are right now because everything's on sale. I mean, everything is really 50 to 60% off of where it should be. So of course investment's going to come in, drive prices up. People are going to see that, get excited, want to jump on the train, and then we're going to see prices come back up to normal. So yeah, the question remains in everyone's mind, how long, when. But look at this, guys. I mean, Flux, hey, just as I've been talking, it's already up 5%. So there's a lot of really strong cryptos out here, really strong, that have very, very high interest levels for investors. I mean, these coins have major interest from investment perspective. Okay, so that's that. I wanted to point out something to look for. Like, okay, how do we know we're going to recover, right? Aside from public sentiment, how else do we know that we're going to recover? Well, two key issues here I want you guys to look at, and I want you guys to keep in mind, is this is the 200-day moving average. As long as Bitcoin closes the daily candles at or above the 200-day moving average, not too far below that, we're good. Okay, we're still in the bull market. If it closes above I would say we're not in the bull market, but we're not yet in a bear market, right? If it closes above $54,000, Bitcoin closes the daily candle above $54,000, it's on. The bull market's back, and we're going to see new all-time highs. Now, what happened last time the daily candle closed right at the 200-day moving average? Let's take a look. We had, these don't really count because it's kind of transitory through it. We had these, which wasn't very much, but let's say from a big red candle, right? From a big red candle to the 200-day moving average, we get a close. This looks like one, right? Yeah, last time was in September 7th, and we dipped down, big red candle, right to the 200-day moving average. The next day was pretty red, but the overall, after just a few weeks, we saw a nice recovery, guys. This took how long? This took how many days to come back? 24 days. So you could expect about a month, like I said, after the holidays, maybe mid-January, we're going to start to see big recoveries here. Another thing to look at too, let's see if we can find any other indicators of, no, this is pretty much the best I think that we have right now. So I know this is a slightly green candle today, but history tends to repeat itself. It tends to rhyme and repeat and things like that. So we probably will see something like this play out. This is what I'm expecting over the next 20-some days, okay? A little bit of this, maybe a nice dip down here. Shake out the leverage, which has been a big deal, before we see a major hike back up to regular levels. So yeah, maybe the 9th or 10th of January is where I would expect it, based on that beautiful drawing there. Covering a bit more news here. So the Bank of England says crypto regulation is needed as risks grow. So again, this is just more contributing to the fear. Bank of England said crypto assets are becoming more integrated into the UK's financial system. Well, see, that's super bullish, right? I mean, they're talking about integrating crypto assets into UK's financial system. While they don't yet pose a major risk, increased regulation is needed. Whatever. I mean, maybe it is. Maybe it is. Okay, so do it. Rip off the Band-Aid already. Let's go. This is an interesting article I wanted to talk about really quickly too. Is 10% of Cardano's wealthiest addresses control 94% of all ADA circulating supply. This is kind of a fuddy article on Cardano, and when these come out, it's like it almost makes me just want to buy it, just because I know that somebody's trying to dump the price down so that they can pick it up, super cheap. Despite a turbulent 2021, Cardano whales seemed unmoved by it, with a small number of the richest ADA holders controlling roughly 94% of the circulating supply. The top 10%, I mean, you think about it, that's a lot of people. Top 10%, come on, of whales hold over 31 billion ADA. Yeah, that's a lot. So interestingly, the data from Coinmetrics shows that these top addresses are accumulating more ADA, which correlates to the rising development activity on the network. So yeah, I mean, these whales are really they're subsidizing the system, you know, of ADA. And are they suppressing the price? Maybe. I mean, sure, they probably do suppress the price, but at the same time, these guys have a major interest in keeping the price high. You know, so I don't think that they're suppressing the price by dumping their bags onto new buyers. I don't think there's any interest in that right now. I think ADA is such a good project. You know, I think Cardano, the future of Cardano is so bright, and it broke down below, by the way, this expanding, falling channel. So, man, it's a really good buy right now. I mean, we're looking at ADA, levels of ADA that haven't been there since July of this year, summertime, before the major pump. So, you know, if you're able to get in at those levels, and we know how these cryptocurrency markets go, right? They go up, they go down, they go up. It's catching at a pretty nice level. You know, I don't see Cardano going that much further down. Maybe 99 cents. You know, maybe. I don't see it though. I don't think so. I think it's bound to come right back up into this channel, in my opinion. I mean, there are a lot of ADA out there for sure. There's a lot. There's 38 billion. So the price is going to be tough to crank up like that. But we're seeing now DeFi starting to come in on ADA. So, you know, when articles like this come out, like I said, it just makes me bullish on it. Here's another article. Twitch co-founder Justin Kan launches gaming NFT marketplace on Solana. 3 huge things to take away from this, okay? Twitch co-founder guy. That's a big deal, okay? This guy's got a lot of money. And he's got the experience in terms of technological experience for growing something new, right? He's got it. NFT marketplace, nice. So NFTs, Twitch co-founder, interested in NFTs. And not only that, but NFTs, number 3, on Solana. Wow. I mean, what can I say? That's awesome. Web3 gaming received another boost on Monday with the announcement of Fractal, a marketplace for gaming-related NFTs led by Twitch co-founder Justin Kan. The platform will serve as a primary marketplace for players to buy non-fungible tokens directly from the game companies to use in-game, as well as a secondary marketplace for peer-to-peer trading. So basically it's like OpenSea, because it allows for peer-to-peer trading. People have always been able to make real money playing video games, Kan told CoinDesk in an interview. What we're seeing with Web3 gaming, it feels like a natural development towards ownership gamers have always wanted, of course. The company already has a number of gaming projects in place to be announced in the coming week. Wow, in the coming week, so this is happening very soon. We have, Kan is an active investor in Web3 gaming in recent months, leading an $8 million funding round for Solana-based Mafia game Sin City in November. Something to check out. I mean, I am a huge fan of the Solana ecosystem. I have had nothing but good experiences with the Solana ecosystem, and it's something that I think that everybody should try out at least once. To be honest, I mean, you know, Solana ecosystem is super fast, it's super cheap, but most importantly, I think it's resilient. You know, it has had so many attacks, and it's been resilient, and it's found its way through it. And I think this is really cool that NFTs are being launched on the Solana network by a big name with a big money backing it, and it's going to also be a marketplace, a peer-to-peer marketplace, just like OpenSea. So that's for sure the next OpenSea. Keep an eye out for that. Yeah, I think that's it. I think that's all I wanted to talk about right now. I hope that this overview proves to be informational for everyone. And if you like staying ahead of the curve, click the like button and subscribe down below. And then you'll get updated on all the crypto space before everyone else does. So until next time, guys, keep your portfolio strong and your hands stronger.